Okay, as I said, we're going to focus on an example that I use in my classroom. So we work on this together. So really what you would have is you would have this part of it missing. I'm leaving it here just simply because it's easier than me retyping everything on screen. So here we are. We've got Miles Manufacturing has prepared the following sales budget for the first 4 months of the year. January, they expect to sell 20,000 units of something. February, they expect to sell 22,000. March, 25, and April, 21,000. Miles estimates that it will begin the year with 3,000 units in inventory. Okay, so before January begins, they already have 3,000 units in inventory. The company wants to end each month with inventory equal to 25% of the next month's projected sales. Prepare a production budget for January through March. So what we're looking at here is you're saying, well, this is how many I plan to sell. I plan to sell 20,000 in January, but I also want to have 25% of the next month's projected sales. So with that, I would have to say for January, I'd say, well, I want 25% of this month's sales already in there. So I'm going to have to add that. And that's going to be my total units that I need. Minus, how many units did I have to start with? Well, in this case, I had 3,000 units to start with. And that's going to tell me how many units I need to produce. So with that, let's start throwing those numbers in here. Okay, it's the same format down the side here that I have right here. And I've got January, February, and March. So with that, like I said, I expect to sell 20,000 units in January. So that's my first number. Plus, what I want to have is I want to have 25% of February's number of 22,000. So 25% of 22,000 is 5,500. So how many units do I need to make? Well, how many units do I need overall? Well, I need the 20,000 for January plus 5,500 so that I don't start off February with 0 units in my beginning inventory. I want to start off February with 5,500 units. So with that, I need 25,500 units. Okay, that's what I need to make in January. And I say to myself, all right, if I need to make 25,500, that's great. How many do I have already sitting in my inventory right now today? And you had 3,000 units, still sitting in there from the previous month, from December of the prior year. So really, the whole number I need to make in January is 22,500 units. Okay, I hope that made sense to you. So let's move it along. Let's start with February. Well, February I need to sell 22,000 units. There's my 22,000. I want to have 25% of March's numbers now I want to make 25% of what I need for March. So 25,000 at 25% is 6,250. Okay, that's 25,000 at 25%. So really the units I need for February are, wrong way, 28,250. I need 28,250 units. But how many do I have left over from January? Well, left over from January, I have this 5,500 units, right? That was the whole point, is I wanted to make 5,500 units, so I didn't start February with 0. I'm starting with February with 5,500 units still sitting on my shelves. All right, so I don't need to make 28,250. I need to make 28,250 minus the 5,500 that comes from the previous month. All right, so really what I need to produce this month is 22,750. Okay, one more month to go. So I expect to sell 25,000 in March. So let's start off with the 25,000, and then I want to make 25% of the following months. So 25% of 21,000 here is 5,250. All right, so total units needed during the month are 30,250. But am I starting with any at the beginning of March that I don't have to make? Yeah, I am. I'm starting off with the extra ones I made in February. I made 6,250 extra in February so that I wouldn't start off March with 0 units. So what I really need to make in March is 24,000 units. Okay, I hope that made sense to you. That is the production budget. Alright, so here we go. Let's move along with this. Let's move on to our direct materials purchases budget. So here's some information that we need to know about the materials. Every item that we make, every unit requires 2 pounds of materials, and materials cost 60 cents a pound. And we have 4,000 pounds of materials of inventory sitting on January 1st, and we want to have 5,000 pounds on hand at any time in our ending inventory. Okay, so here's our little schedule here. How many materials do we need? How many do we want to have at the end? Gives us total materials needed. Basically, the format's the same as above. Minus how many materials do we have in the beginning means now we know how many we have to buy. So just think about that. We say to ourselves, well, we need so many to make our product. We want to have so many left over at the end of the month. But how many do we have on hand already? Let's back that number out. And that tells us how many we have to buy in this month. And this is important because you have to make these purchases. You have to give this to the purchasing department. Okay, so using the numbers from above, and just to look for a second, you can see that we were making 22,500 here and 22,750 here. But let's look at the 22,500. We're making 22,500 units, of which require 2 pounds of material apiece. So with that, the amount of materials that we need here is 45,000 pounds, which is the 22.5 times 2. Plus we want to have 5,000 pounds in ending inventory. So the total units that we need are 50,000 this month. Alright, so we need 50,000 pounds of material this month, but we still had some left over from the previous month that is in our ending inventory, and we're told that we had 4,000 pounds of ending inventory on January 1st. So with that, we really only need to buy 46,000 pounds. The price per pound 60 cents. So the amount of money we're going to spend on direct materials is $27,600. Okay, so looking at February here. Well, February, the amount of materials we need is 45,500, which is the 22,750 times 2 pounds at 45,500. Oops, too far. All right, and ending inventory, at any time I want to have 5,000 pounds of materials that's given to us right here. And so the amount of units I need are 50,500. I've got beginning inventory of 5,000 because in January I wanted to leave 5,000 pounds left over. Well, so at the beginning of February, there's my 5,000 pounds. All right. So total units I need to buy is 45,500 at 60 cents a pound. Gives us a direct materials amount of $27,300. Okay, so we only did 2 months, but obviously you can keep doing this for the other months as well. I hope this helped with that piece of it. So now let's move on to the last one, the direct labor budget. Alright, so we're looking at direct labor budget for Miles Manufacturing for January and February, and we're saying it takes them a quarter of an hour, 0.25 hours to make 1 unit, and the average pay rate is $13 an hour. Okay, so this is a little bit simpler to look at. You know how many units you want to produce. You know how many hours it takes per unit. Gives you the total hours you require for production, times an hourly rate gives you the total direct labor cost. So let's look at this. Alright, in January we wanted to make 22,500 units. That was given to you in the production data. Alright, we want to make 22,500. And it takes them a quarter of an hour to make any unit. So, how many hours is it going to take us? It's going to take us 5,625 hours. That's our total hours required for production. We're going to pay these guys, or girls, $13 an hour. So the amount of the labor cost to us is $73,125. My apologies for the lack of underlines here. So let's look at February now. February we want to make 22,750 units. It takes us a quarter of an hour per unit. So in total, it's going to take 5,687.5 hours to produce that number of units at an hourly rate of $13 a piece. Brings us to a total direct labor cost of $73,937.50. Alright, I hope that this helped you understand how the budgeting would work for these types of budgets. Alright, the last budget I want to touch upon briefly is I want to talk about the cash budget. I mean, that doesn't mean that you shouldn't be reading the chapter and finding out about the other budgets that are in there. There are things like the capital expenditures budget, which is a longer-term budget. I may as well mention it now. It's a longer-term budget, and the capital expenditures budget, the idea is you're trying to decide where you're going to spend your money over the long period of time. Where are you going to spend your money over 5 years, 10 years, 15 years, 20 years? Are you looking for a plant expansion? That's not something you're going to see in a short-term 1-year budget. That's something you're going to be looking at to plan for big purchases in the future. Alright, so the other budget, like I said here, that I want to spend a little bit of time on is the cash expenditures budget. And the reason being is because a business needs to know that it's got enough cash on hand to pay for things. So let's look at this example exercise. Landon Awards collects 25% of its sales on account in the month of the sale and 75% in the month following the sale. If sales on the account are budgeted to be $100,000 for March and $126,000 for April, what are the budgeted cash receipts from sales on account for April? So here we go. What we're starting off with is we're looking at April, and we're saying that in April, our collections from March, we're going to collect March 75% of the previous month's sales in the current month. So let's go back up for a second. Oops, there we go. we're wondering how much money we're going to have on hand in April. When we say, well, of this $100,000 that we sold in March, 75% of those people are not going to pay us until the month after the sale. So March's sales, $100,000 at 75%, we're going to get $75,000 from those people. Now for the sales in April, okay? From the sales in April, you've got $126,000 in sales in April, and you're going to collect 25% on the sales in April in the month of the sale. So that what they're saying is for the people who bought items in April, 126,000, 25% of those people won't pay us until April, or will pay us in the current month. All right, so we're collecting money from March and we're collecting some money from April. So with that, the amount of money that we're actually going to collect is $106,500, which is 75% from March's sales and 25% from April's sales. All right. Now this doesn't account for the people who don't pay us for months, but for our purposes here, the idea is that we want to make sure we have enough cash to pay our bills and that we're collecting enough money in order to fund our operations. And that's all the ones we're really going to delve into in this chapter. I hope they helped.